Welcome, crypto family, to No One Daily Bitcoin Pod. We did tap a new low of 78,000. We're pretty wild, but we bounced back pretty significantly, currently above 84.3 in today's show. I'll be breaking down the latest Bitcoin technical analysis, as well as breaking news. The Trump administration files trademark for Trump with plans to launch a metaverse, an NFT trading platform. We'll also be discussing Bybit hacker launders 605 million in Ethereum, over 50% of the stolen funds, as well as the SEC says meme coins are not securities, but that fraud will still be policed. We'll also be discussing Bitcoin could hit 500,000 per coin before the time Trump leaves office, according to Standard Chartered Bank, as well as breaking news. Arizona crypto reserve bills inch closer to law after passing the Senate, as well as breaking news. Texas strategic Bitcoin reserve bill advances to the Senate floor. Let's go. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. If you're new to the channel, very important to smash the likes, then go ahead and subscribe to receive daily premium crypto newsletters every single day, 7 days a week, just like this. Today is pod 1919. I'm your host, JV. It's the final day of the month, February 28th. 2025 hasn't been an exciting month as far as the markets. Massive volatility. Go figure, but very bearish overall month for the month of February. Let's kick it off with our market watch as we do each and every day. You should be able to see Coin 360 on your screen. Bitcoin currently hovering at 84,200 at the time of the live stream. Ether down 3% all the way down to 2,200, which is like multi-year lows. We haven't seen Ether this low in a long time. Solana is up 6%, one of the few top coins actually in the green. And checking out coinmarketcap.com. The current crypto market cap is all the way down to 2.78 trillion. Bitcoin market cap, 1.66 trillion. We have roughly 185 billion worth of volume for the past 24 hours. And the Bitcoin dominance is currently at 60% even, with the Ether dominance all the way down to 9.6%. And checking out top 100 crypto gainers past 24 hours. Barachain up 10%, Solana up 6%, and WIF up 5%. But the majority of the alts correcting and in the red. Which alts, if any, are you bullish on for the bull? Holla. And checking out the crypto bubbles, we get a visual perspective on the day. Safe to say 80-90% of the market on tilt. Zooming out on the monthly, it's like 90 to 95% of the market Rec City, as you can see. And checking out the Crypto Greed and Fear Index, today we bounced back a little, a 16 in extreme fear. Yesterday was the bottom with a 10, and last week a 55 greed. Last month a 72 in greed. The silver lining, the lower this number gets in extreme fear, the more likely of a pump. Nonetheless, let's continue with our TA, aka Astrology for the Broskies. And again, welcome everyone joining us. Happy 420 people here on the live stream. This headline reads, Bitcoin risks deeper drop if 75,000 support fails amid the macro concerns. The good news is 78 held up, which is the current bottom. But if we do test 75, we're most likely going to drop to 70, according to some of the top analysts. So let's break this down. Analysts attribute the current decline to the macroeconomic concerns related to the potential trade war between the U.S. and China caused by Trump's decision to impose import tariffs. And it's not just crypto getting wrecked right now. It's all financial markets, stock market, you name it. These macroeconomic concerns were the main reason for Bitcoin losing the 80,000 support. Bitcoin's dropped below 80,000 amid investor fear from Trump's tariffs and market unrest, points to a correction likely hitting 76, 78, precisely what we just bounced from, 78. Nearing 75 as a key support level based on historical patterns and trader sentiment. Still, some analysts are concerned that Bitcoin's correction may see the world's first crypto revisit 70. I mean, Arthur Hayes is calling for it at least. We've covered that in the past couple of podcast episodes. Based on the correlation with the global liquidity index, Bitcoin's right-hand side, which marks the lowest bid price someone is willing to sell the currency for, may fall below 70,000 around the end of February after a peak near 110,000 in January, which was Jan 20th inauguration day, 1093 to be precise. The first warning of a correction to 70,000 came from Raoul Powell. Well, I would dare say macro investor, Arthur Hayes. We've been covering that. I don't really cover Raoul Pal too often here, so I'm going to give Arthur Hayes the credit because he's been calling it for a couple of months. Maybe Raoul has been as well, but I can't verify that because I haven't seen it. Despite the poor investment sentiment for the investors, Bitcoin seems unlikely to fall to 70 before the end of the week, but I'll dare say anything is possible. Be prepared for all scenarios. Michael Saylor's strategy says a plunge to 70,000 seems less probable without significant new downside catalysts. Quoting analyst Lee from BitGet, a further plunge to 70,000 is possible, but less probable by March 2nd without a significant new shock. The 75,000 level aligns with technical support and stablecoin buffers, while 70,000 would need sustained panic or macro deterioration beyond the current pressures. And I also like to pull up some of the live charts, but first, breaking news just in. The Trump organization files a trademark for Trump with plans to launch a metaverse and NFT trading platform. My initial response, Trump admin going full metal jacket retard into crypto. And also breaking news at 80,000, Bitcoin down 27% from the all-time high of 109. Is that really a big drawdown? Well, not according to history. These are all the times Bitcoin had a massive correction from 33% all the way to 84%. So 27 is nothing new, and as they say, there's nothing new under the sun. I'll call my brother son because he shines like one. Check it. But there you have it. Let's also pull up some of the live charts. We'll do some live chart action, Jackson satisfaction for the broskies here live and on your screen. This is via TradingView, via Coinbase. Thank God we've recovered from 78. Again, we're currently above 84, 2-ish in that ballpark. Green escalation back up. As you can see on the 1-hour chart, zooming out from here, we take a quick look at the 4-hour. Again, this is live and in the flesh. Big green candle, 2 consecutive, which is a good sign. Hopefully, we can continue the momentum versus to continue to dump here over the weekend as we close out February. And we'll get a monthly candle close here in maybe around 5 hours. And zooming out on the daily, you can see the daily chart's been not good. Past 3 consecutive days have all been red, taking us down to the new bottom of 78. We do have a target on your screen at 68.7 and also a super bear target of 49. Do I think 49 is probable? No, but you should be aware of all the potential, price points we could potentially reach. I think here personally, we'll continue to correct over this weekend. And I think next week we'll continue to pump back. I hope I'm wrong, though. I hope we pump over the weekend, but there's just no telling. There's a lot of bearish sentiment currently in the market. And zooming out from the daily to the weekly, big bearish weekly, unfortunately, and most likely we'll get a weekly candle close on Sunday in the bearish territory. We still have the silver lining. There's still a cup and handle 124,000 target, which is in play for Q1, which can potentially happen here in March. But you guys let me know where you feel the pretty low biddy likely to take us next. And checking out the 1 month, you can see February has been very unsatisfactory for the price action as we're forming a pretty significant monthly candle close before reaching March here tomorrow, which will be the first of the month. Next story of the day. Let's actually dive into the Bybit hack. Then we'll discuss meme coins officially not being deemed unregistered securities according to the SEC. But yeah, money is on the move. The Bybit hacker laundered $605 million worth of the ETH, which is more than 50% of the stolen funds. I believe the hack was for $1.4 billion, making it the largest hack in crypto history. The Bybit exploiter already laundered over $605 million worth of Ether, or more than 54% of the total stolen funds, according to Look On Chain, as they shared here. So far, the Bybit hacker has laundered 270,000 ETH worth $605 million, 54% of the stolen funds, and still holds 229,395 Ethereum, which is roughly $500 million. Good Lord. North Korea's Lazarus Group was identified as the main culprit behind the Bybit exploit. According to Arkham Intelligence, the exploiters used the cross-chain asset swap protocol, Thorchain, to move the funds. Thorchain swap volume rose past the 1 billion record high after the Bybit hack. The protocol was the subject of significant controversy amid the growing flow of illicit North Korean funds. Some industry watchers criticize Thorchain's privacy-preserving features for enabling the movement of illicit funds by the North Korean agents after a vote to block the North Korean hacker-linked transactions was reverted to the protocol. One of the leading Thorchain developers announced his exit, quoting him here, "Effectively, immediately, I will no longer be contributing to Thorchain. Pluto says they would remain available as long as I am needed and to ensure an orderly handoff of my responsibilities." Pluto's exit comes after Thorchain validators TCB shared that they were one of the 3 validators that voted to stop Ether trading on the protocol to cut off the Lazarus group. TCB later wrote on X that they'd also exit if we don't rapidly adopt a solution to stop North Korea flows. Meanwhile, the FBI urged crypto validators and exchanges to cut off the Lazarus group and confirmed earlier reports that North Korea was behind the record Bybit hack. And apparently they're behind several attacks, and I guess there's nothing nobody can do to stop them, hence they continue to do what they do. Thorchain founder John Paul shared he has no involvement with Thorchain, but none of the sanctioned wallet addresses listed by the FBI and the U.S. Treasury Office of Foreign Asset Control has ever interacted with the protocol. So they claim. The actor is simply moving funds faster than any screening service can catch. It is unrealistic to expect these blockchains to censor, including Thorchain. And there you have it. Money continues on the move. But here's what is ironic. Even the hackers don't want to hold that Ethereum. If Ethereum was so great, the hackers would just hold on to it. But they're dumping it as fast as humanly possible. Let's continue with the news, fam. I appreciate y'all. Let's discuss the SEC reacting to meme coins and actually providing some level of clarity here. I could guarantee you what Gensler, when he was here, he definitely deemed everything as an unregistered security, especially a meme coin. But now things have changed. We have a very pro-crypto administration with the Trumpster. The headline here reads, SEC says meme coins are not securities. I repeat, it's official. The SEC says meme coins are not securities, but fraud will still be policed. I don't know how they're going to police the fraud and allow, but shit, let's get into it. The US SEC says it does not view meme coins as securities, but warned any fraudulent tokens. So my question becomes, what is going to deem a token fraudulent, right? The agency's Division of Corporation Finance said February 27th statement, in its view, meme coins do not involve the other and sale of securities under the federal securities laws, and liken it akin to collectibles. So I guess a meme coin is going to be deemed like a Pokemon card. Go figure. As such, persons who participate in the offer and sale of meme coins do not need to register their transactions with the SEC. It added that the meme coin buyers and holders wouldn't be protected by the U.S. security laws, but said the fraudulent offer and the sale of meme coins may be subject to enforcement action or prosecution by other federal or state agencies. However, the division also said its statement wasn't a rule, a regulation, guidance, or statement. So I guess the SEC still providing zero clarity. I guess they're saying one thing, but they're like, it could mean something else. So my understanding, it means nothing. But anyways, the SEC says it wasn't approved or disapproved by the commission. So still providing no clarity, has no legal force or effect. The SEC added it shared its views as part of the effort to provide greater clarity. Well, that doesn't really provide greater clarity in my opinion. It provides nothing. Am I misreading this, guys? Let me know. U.S. President Trump has moved to cull the SEC's regulatory oversight of the crypto space, looking to make good on one of his campaign promises. The agency launched a crypto task force last month to create a framework for digital assets. Trump and First Lady Melania themselves launched meme coins days before they entered the White House on Jan 20th, which sparked criticism from many crypto commentators and Trump supporters. Trump's meme coin, Trump, is down 83% from the peak. Melania's token, Melania, down 93% from the high, as per CoinGecko. The SEC statement comes after ABC News reported the same day that the U.S. House Democrats are set to introduce a bill banning public officials introducing presidents from being able to issue, sponsor, or endorse any security, commodity, including meme coins, digital assets. In the statement, the SEC that meme coins typically have limited or no use or functionality and tend to experience significant market price. Well, that's accurate. It added that the meme coins doesn't fit with any of the common financial instruments specifically enumerated in the definition of a security, such as stocks or bonds, as they don't give a yield or rights to future income, profits, or assets of a business. The SEC said a meme coin doesn't fit under the definition of an investment contract under the securities defining Howey test, defined as money invested in a common enterprise, such as a business, where investors have an expectation of profiting from efforts of others, including the agency here. In other words, a meme coin is not a security. Next story, we're going to now get into some bullish sentiment from Standard Chartered Bank, projecting Bitcoin hitting 500,000 before Trump leaves office, which means within the next 4 years, clearly. And then we'll discuss the latest adoption of Bitcoin for the state of Arizona, as well as the latest with the Texas Strategic Bitcoin Reserve Bill. And then we'll do some live Q&A just for a little bit as Nippinator continues to give us his indicator. So yeah, Bitcoin to 500,000 according to Standard Chartered, and the primary shareholder of Standard Chartered is none other than BlackRock. So let's break this one down. In a new February 27th interview with CNBC, Standard Chartered's head, Mr. Kendrick, not to be confused with Kendrick Lamar, says he expects Bitcoin's price to reach 200,000 this year. Let me know if you agree or disagree. Before surging to 500,000 per coin before Trump concludes his second term. I guess that would mean by the year 2028, right? He cited growing institutional adoption and the potential for clearer regulations. Well, we haven't gotten any damn clear regulations as of yet, but hopefully that changes here. Despite the recent volatility, crypto markets should become less rocky over time as more institutions adopt the asset class. These players will also alleviate the security risks that seem inherent to crypto protocols, as evidenced recently with a 1.4 billion Bybit hack. Quoting them here, what we need are traditional financial players like BlackRock and others that have ETFs now to really step in. It's the institutions like ours that now offer custody businesses that are much more secure than the hacks. And as the industry becomes more institutionalized, it should be safer. And since reaching the all-time high of 109.3 on January 20th, the Bitcoin price sank to more than a 3-month low of now 78,000 as of today. And tariffs on Canada and Mexican goods scheduled to go into effect March 4th here next week will indeed go into effect as scheduled, according to Trump via this post on Truth Social. Bitcoin reacting so sharply to the tariff threats suggests that the digital asset has become highly correlated with stocks and liquidity concerns, according to the Kabisi letter. Global macro investor Julian said Bitcoin's recent pullback is normal in the bull markets, especially after a massive run-up in price following the U.S. presidential election. And I did share with you in this chart here that a 27% correction, which we just witnessed, is nothing new. Previous cycles, we've seen significant declines from 30 to literally 85%. To 94%. So there's nothing new really under the sun here. But you guys let me know your thoughts, how far we're likely to dip. But let's continue. 2 more stories to share with you, and they both in the same boat as far as strategic Bitcoin reserve bills for the states. So this one's Arizona, then we'll discuss the latest with Texas, and then we'll do a little live Q&A. Headline reads, Arizona crypto reserve bill inches closer to law after passing the Senate. That's right, Arizona Senate advanced the Bitcoin reserve bill, bringing to a second place behind Utah in the race between U.S. states to get a crypto investment bill finally approved. The Arizona State or Senate passed the Strategic Digital Asset Reserve Bill, SB 1373, on its third reading February 27th, yesterday, with a vote of 17 against 12. It now advances to the state's House. The bill, sponsored by Republican Senator Mark Finchem, says it would create digital asset strategic reserve fund administered by the state treasurer, which would consist of money appropriated by the legislator for the crypto seized by the state. The treasurer can invest more than 10% of the total fund deposits in any fiscal year, but may loan digital assets from the fund to generate returns if it doesn't increase financial risks to the state. Quoting Dennis Porter here from the Satoshi Action Fund, whether you like it or not, legislation will happen at the federal level in this order: stablecoins, market structure, and strategic Bitcoin reserve. And you can see Utah is actually leading the race right now as far as all the states are concerned, then Arizona, then Oklahoma, Texas, and then you can see there's Florida, there's Georgia, there's Iowa, Illinois, etc. as they move up in the strategic reserve race. Another Bitcoin reserve bill is also making its way through Arizona Senate, and that's the Strategic Bitcoin Reserve Act, SB 1025, co-sponsored by Republican Senator Wendy Rogers and Representative Jeff Wanger, and also passed the Senate's third reading February 27 with a vote of 17 against 11. The Rogers and Wagner sponsored bill focuses on investment authority for public funds to invest in crypto assets, while the FinChem sponsored bill establishes a specialized fund for seized digital assets and appropriated funds. There are currently 18 U.S. states that have crypto reserve bills pending Senate votes, while 2, Arizona and Utah, are in the final stages of the approval process. Let me know which one you think will get approved first. State crypto investment bills have been rejected thus far in Montana, Wyoming, North Dakota, South Dakota, as well as Pennsylvania. Bitcoin reserve proposals are gaining support across the U.S. thanks to President Trump's pro-crypto policies. Bitcoin, meanwhile, has tanked 17% over the past 7 days as it struggles to keep gains due to the economic uncertainty over Trump's sweeping incoming tariffs. Now for our feature story of the day. Texas Strategic Bitcoin Reserve Bill advances to the Senate floor. That's one step closer, baby. Let's go. Let's break her down. Texas Senate Bill SB 21, establishing a Bitcoin and crypto strategic reserve, passed the Senate of Texas Banking Committee yesterday, February 27th, in a 9-0 vote, and now advances to the Senate floor for further deliberation. Let's go. The bill gives the Texas Comptroller of Public Accounts the authority to acquire, sell, and trade any investment that a prudent investor exercising reasonable care, skill, and caution would acquire. The bill also read, Bitcoin and other cryptos can serve as a hedge against inflation and economic volatility, and the establishment of a strategic Bitcoin reserve serves the purpose public of providing enhanced financial security to residents of the state. Several U.S. states have pending Bitcoin strategic reserve bills, currently including Oklahoma, Arizona, and Utah. And to diversify state financial reserves and hedges against rising U.S. dollar inflation. Here's an example of that actual bill, SB number 21. And the Texas Strategic Bitcoin Reserve legislation was introduced by State Senator Charles Schwertner in January of this year as Bitcoin-only bill that omitted the acquisition of other digital assets. However, February, which is obviously the month we're in, the bill was refiled to include other digital assets following Trump's January 23rd executive order directing commissions to study the feasibility of digital asset stockpile. So thanks to Trump, not only are they entertaining the Bitcoin strategic reserve, but they're entertaining the shitcoin strategic reserve, unfortunately, following in the footsteps of Trump. And also, Nexo analysts shared that February 18th public hearing SB 21 was symbolic and was not a major Bitcoin adoption price catalyst. He added that unless specific policies were enacted, like the state of Texas actively acquiring Bitcoin specific as part of its portfolio, the markets would have a lukewarm response to the news. Pierre Rockard, Bitcoin advocate and vice president of research mining company Riot Platforms, testified at the hearing for SB 21, arguing for Bitcoin strategic reserve. And that's what we want as Bitcoiners. The executive said that while Texas currently has a flourishing economy, it must be prepared for future economic downturns and fiscal uncertainty. Quoting him here, public trust and financial institutions have eroded due to the lack of transparency, but Bitcoin is a unique asset because it is fully auditable. That's right. Every 10 minutes, the entire Bitcoin network gets audited. And if you don't know, now you know. You know what? Speaking of audits, you know what hasn't been audited in over 50 years? The Fort Knox gold reserves for the United States. How do you think that will likely fare out? What are your thoughts regarding all this adoption at the state level? Let me know. And do you think Trump will ever sign specifically a strategic Bitcoin reserve bill versus a crypto stockpile bill? Let me know your honest thoughts. I'll read your comments out loud. Welcome everyone to the Q&A segment of the live stream.